Good morning, listeners. Welcome back to Mornings with Max. So, today I wanted to cover a couple of different things, but really it's one thing. And I wanted to go over historical trends in the housing market because all we hear nowadays is how high interest rates are and how expensive homes are. And I think it's really important that we look at trends and trend lines to fully understand where we are today and what to expect statistically in the future. So basically what we're gonna do here is we're going to look at a graph. All right. And this graph is going to show the mortgage rates historically. So the highest that it's been in the United States was way back in 1981. My parents are going to be mad for saying way back, but in 1981, historical interest rates, fixed interest rates, excuse me, were at 18.53%. Now we're complaining about, 6.5% interest rates nowadays, but 18.53%, absolutely insane. Of course, people were paying $20,000 for houses and sometimes even less, but that's not the problem here. And if we go back to 1975, actually, Q1 of 1975, and the interest rates hit their peak in October. So we'll go to Q4 or Q4 1975. The median home price in the U.S. was $41,200. So essentially, what I want to show here is as interest rates go down, home prices go up. And we saw a very much a up and down, up and down, up and down, but continual drop in interest rates from the late 80s to the mid 90s. And essentially, what correlated this was from the late 80s, from 1987, 111,000 home prices went up to 126,000 in 1990, and then went up to 130,000 in 95. So we have a slight correlation in dropping in interest rates and increasing in home prices. And as we see, if we go from, after the crash, and this just happened to correlate again from 2008, interest rates were at 4.84%, which is really nice. And as they went down from 2010 into 2013, we went down to 3 point or mid threes that same time from 2010, 2015. We saw $214,300 for a national average in home prices. And then in 2015, $289,200. So we're seeing that trend again. Now, where we get into a weird snuffle is around COVID. We saw the rates drop to historical lows, 2.65% in 2021, which is an insanely low interest rate, historically low. And I think that's why we're in kind of a crux right now, is because we saw those not too long ago, and people are expecting those rates to drop to that price or that percentage again, and that's just probably not going to happen. And the only thing that's weird here is, from 2021 until, 2023, is we saw a sharp rise in home prices and a sharp rise in interest rates. And the reason because of that is we were printing money like crazy, inflation was really high. So we needed to offset that somehow. And that was due to basically just raising the interest rates. And that's why we're in a quote unquote problem right now. We saw increase in interest rates and increase in home prices, two things that didn't really correlate in the past. But what we are seeing again is drop in interest rates. If we see these drops again, we have to expect that the home prices are going to continue to rise. We want to go off of trends. We don't want to go based off of gut feelings or anything like that when we're talking about the economy. especially now because rates have been pretty stagnant since late last year. We've had a lot happening, but we've been in the mid sixes since like 2024, and we've spiked up a couple of times into the high sixes, low sevens, but really we've been from 6.5 to 7% for the past 2 years, which is kind of a decent thing. I'm not going to say a good thing because we're seeing a little bit more of consistency in that market. And we're seeing that kind of correlate in home values. We've seen a little plateau um, nationally, but, you know, right now we're still in a limited inventory in a lot of the country, especially in New England. And if we and we're getting close, but we're in peak market right now, so we're this is the most houses we're going to see for sale during the year, in the summertime. Um, we are seeing an increase in inventory, but we're still below national or historical averages for inventory. So, if we see a decrease in interest rates, fully expect a increase in home values because of the limited inventory and because of the housing shortage that we're seeing across the country. So I hope that little snippet helped out today. A little lesson on interest rates and historical home prices. Feel free to suggest anything you'd like to see me to talk about, and thanks for listening.